Testing. JB here. Hope everyone's doing outstanding. October 4th, 2023. Don't really have too much to talk about outside of what I said yesterday in the last couple days. The SPY came down all the way down to 418.80. I believe it was right before the Europe markets opened overnight. And ever since that, we've been sort of in bounce mode. ADP employment numbers came in. Let's see, did I have the exact numbers on those? Did I pull up the chart? Sorry about this, folks. Hang on. So we have a mixed bag of results now. So yesterday we had the JOLTS report, right? So showing more jobs were available than expected and a bigger than expected change. I think it was the biggest increase in a year. And then in August, we had the biggest increase of all time. So that's all positive data. More jobs open mean the economy's doing great. Companies are thriving, looking for employment, and they can't find enough people to fill the jobs. Then this morning, we get the ADP numbers, which is just the private sector employment numbers, and they came in less than expected. I think it was 89,000 jobs created as opposed to the estimates of, I guess, 140,000. So now you have a mixed bag of data. So is the employment numbers on Friday, they're going to miss expectations? Is the unemployment rate finally going to start ticking to the upside? If that happens, the market's going to rally 1 or 2% somewhere in there. If it's in line, maybe we still stay here or we start to melt downwards. And then if there's a big upside on the employment numbers and the unemployment rate stays flat or declines, that's probably a recipe for, not some good stuff. Take a look at the market's now pricing in less of a chance of a rate hike for the next two meetings. The meeting is actually, I think it's 28 days from today, is the next Fed decision, which will be out at 2 o'clock on a Wednesday, November 1st, and then the meeting after that's November 13th. So yesterday it was over 1 in 4 chance of a Fed raising rates at the meeting at the start of November, and now it's less than 1 in 5 chance. So I don't know if that's the ADP numbers. Who knows? At the same time, what it does just gives everybody talking points. It's funny, this morning you start reading all these headlines and the pieces that are coming out, and everybody talking about the 200-day moving average, which the S&P it's 4,200, which came down and tested again, and that's it. That's the bottom. I think I still kind of stand pat on. I think we still have a little more downside to go to see some type of capitulation. I don't think the 418.80 this morning before the market opened was the capitulation. We need to see kind of people finally throwing in the cards on the buy side. We get a nice accelerated move to downside quick, and then buyers come in. That's kind of what I'm waiting for. I'm not saying there's not going to be opportunities to play calls, but I think this, depending on Friday's numbers with the jobs report, I still think that 416, 415 handle is going to come on the SPY. Garbage. So this morning I used the move on gold to close out some of my J-Dust calls. I'm actually looking at dust calls at some point, but I'll wait. Dust is still green up here near 16. The liquidity is just tough. It seems like J-Dust a little easier to trade. J-Dust still over the 9 handle, which I think at some point it's $10, especially if gold heads to 1820. Gold went all the way down to 1832 this morning. It was 1832 early in the morning when we had the lows on the S&P, and since bounced, but not too much. It's up $5. You would think, and yields are rising for the first time in 2 days. You would think that maybe it would be a little bullish gold, but my thought process on gold. I don't think, I think it's going to 1820 and possibly below in the coming days. So that's that. Today I also added some more Domino's Pizza calls, pretty much right when it was at 3. I think it was 364. Went all the way down to 362 and change. Now bouncing here $7. Put on the watch list yesterday and today. Post on Twitter if you don't know my thought process around why I think there's an opportunity here to play for a further move to the downside. The issue is next week they report earnings October 12th, which is Thursday pre-market. Premiums are pretty expensive. I talked about on Rant yesterday. I think it's over 7% implied move on the calls. Makes it a little more difficult to trade how I like to trade, which is not to pay too much of a premium. So I'll probably look to close all those puts out before the open Thursday. So sometime Wednesday, Tuesday, depending, unless it keeps moving the upside, then I might have to salvage these and revisit. But typically, I'm not one to salvage it. I still think that there's opportunity to play for downside, so I might get some other strikes uh, that are now less expensive and play that for upside. Well, the calls for upside, not Domino's Pizza for downside. Um, yeah, some other names I was looking at this morning, and LOY, Eli Lilly. It just those stocks have been on monster runs, and anything that had their hands in GLP-1, Ozempic, Mounjaro, all those drugs just been on a tear. And every time you looked, I remember looking when I was getting bullish on VKTX, and I was looking at LLY was like, I think it was like 390 or 400, and then it just kept going all the way up to $600. But middle of September, it went right up to $600 after its earnings run, and dropped $80. Closed under the 50-day moving average. First time it did that since July. Thought maybe a good opportunity to try and trade that for upside. Missed it for the bounce here, but I'll probably wait. Maybe it gets a little small bounce here. It's already given up some of the highs today. Hit 536, and try and trade that for some calls at some point once the market finds some footing. And of course, it's up nearly 0.5%. It's over 0.5% here on the S&P. But do I think that's the bottom? Maybe short-term bounce, a little relief bounce. I talk about this a lot too. That there's so many passive dollars going into the market, right? And usually it's other people's money. I call it OPM. You have pension funds, 401ks. You have all these investment bankers, people allocating savings and pension, all that fun stuff. And all it does is go into the market. It doesn't matter if stocks are up or down, things like that. So you're always going to have buying. It's just a matter of, are people selling? Who's selling? How much? Repositioning, whatever it is. So we could have the worst backdrop with the economy, with the Fed, with everything that's going on, geopolitical concerns. There could be a war, another war. There could be chaos. We could have the debt ceiling, government shutdown. That whole fiasco could be. 40 days from now we could be in the same situation, and the markets could just go up just because there's more buyers than sellers, right? That's how it works, and at some point we sell off, and the S&P is only down. It was down 1% before. Let's see here. Let's see if I can. I don't even have it up here. Why don't I have it up here? Well, we're down 0.8% for the week. So areas to watch on the SPY: at 425 on the way down, and then 422.29. Those were the two spots of support on the way down. I think those would be resistance. So already through that 422.29, and then that 425 or so. If we get up there today, if it breaks, I know Easy's been talking about it in the chat room, that 427 could certainly come. Do I think that's going to be the case? I don't think so, but I'm not going to rule that out. So other names, I'm just being very, I wouldn't even call it cautious, being very selective. So when I do get any kind of upside positions, there'll be probably very small ones, very quick, short-dated weekly strikes. I keep looking at the ROKU, but every time it runs up, it seems to give those gains back. Take a look at yesterday with that Netflix move, right? Netflix raising prices, or at least there was a report there raising prices. Stock goes all the way up to 394 or so, and then gave all those gains back. And Roku was rallying up near 72 on the news and gave all those gains back. So it's tough unless you're quick to pull the ripcord on any weakness. If you're in the calls, then maybe there's a good way to play it. But for now, just be a little more cautious. Other names, and I've talked about AutoZone and O'Reilly Auto Parts. I think that sector is just primed for some pulls. Just unfortunately, the premiums are insane. I put on the watch list this morning. AutoZone, which was at 2,300 only. Let's see if I can pull that up. 2,300 back in June, and it was mid 24s. Let's see. Yeah, 23 back at the end of May, June. I'm not saying it gets there right now, but I could see it get back down to 23 if the market, even if the market stands pat here. I can see some weakness. I just don't understand when you have these companies that have huge debt loads that they haven't been repriced yet. And you look at AutoZone, it started the year at 2,300, went all the way up to 2,700 and this is in a rising rate environment, and we pretty much hit the top of the rates unless things get really crazy. Doesn't look like the Fed's gonna be raising rates anymore, at least maybe one more time. I just don't get how these companies that have so much debt. I talked about it yesterday. Domino's has nearly $2 billion in principal due by 2025 of their $5 billion in debt, and the company only has, I think it's $40 million in free cash flow every quarter. So you're saying $320 million in free cash flow to pay $2 billion in principal. So they got to kick the can down the road or dilute the shareholders via an offering. So I don't get how that's not caked in or hasn't been factored into the stock, or maybe it is, and I'm just totally ignorant to looking at the chart and the valuation. Another name is Sherwin-Williams. Similar story. Huge debt load. The company's been doing great, but it's like these names have rates at some are near zero that they've financed their debt at and kicked the can down the road, and now with rates much higher, I just don't see how that does not weigh on the names and their profits and the long-term outlook on some of these names. But at some point it will, and hopefully when it does, I'm still holding some puts on the names. I think that's about it. I'm trying to think of some other names that I've been looking at. Weight Watchers, just unfortunate. Yesterday it was kind of hanging in there on Monday, even with the small caps getting pummeled, and then yesterday small caps really came under pressure, and then Weight Watchers found pressure, especially towards the end of the day. It was hanging in there, 1080, and then boom, all the way down. Close at 1057, somewhere in there, and finally bouncing today. I'll take an 11 plus close. It's been chopping around there for the last couple of weeks. At some point, there'll be some kind of catalyst, whether it be, is it going to be the earnings? Is it going to be some kind of another analyst raising their price target? I don't know. Still working on a piece. I mentioned it on Friday. I probably won't have it out till this weekend, but trying to the valuation, the addressable market that WW could possibly have. What does that look like? What would that look at numbers, fundamental wise, growth wise? What they have to capture just for the stock to be 20, 30, 40 bucks. I don't think it's much from what they already have. I don't think it's much. And the fact that these insurers are finally starting to require folks to go on programs to get prescriptions approved for weight loss drugs, and then they specifically mention and cite weight WW International as a program. That's just going to push people into their base without advertising. That's phenomenal. So I don't think that all that's baked in. They report earnings. It looks like they'll be the first week or two of November. That'll be past my October strikes, which are not looking good to begin with. And I still have January's. I'll probably add some more at some point, but I just want to see it over 12 bucks. Once it gets over 12, I'll look to add some more calls on WW. I think that's about it. Similar to, like, you take a look at LLY and NVO. Those are the two companies that big benefactors from this whole GLP-1 craze. Those stocks didn't really take off till the end of last year. NVO was a $45 stock in October. It hit $100 in September, or near $100. Maybe it was $98. LL Lilly started 2022 at $225. It hit $600 in September. It started 2023 at $360. So a lot of these names, sometimes it's FOMO, right? So once these names really start generating attention and profits and revenues, that's when they really start to take off and people start to see the big picture. I don't think that's happened yet with WW, and by the time it does, the stock's probably be in the 20s and then much higher. I think that's it. I don't have too much else to talk about. I wish I did. Some other names. I'm trying to think of what else. I had something else in my head, but Lulu. At some points during the afternoon yesterday, I could have locked my puts in for a small profit, held on to them. I still think it comes into the 360 and possibly below, but obviously my time frame is getting shorter and shorter with expiration on Friday. But look great. Look great in the afternoon on no news. So I've been waiting for it to finally breach that 50-day moving average. It did. No, down over 4%. There was no catalyst, and then it's kind of turning around here today. I think it heads under 360, but that's just me. Same with Ulta. Still have a couple. I've locked most of my 385s in. A name I probably prefer to play. I'm probably not going to play Lulu for a while after the last couple weeks. But Ulta, I might look to trade for more downside. Right here at 395, still have a couple 385s left. Um, Wait, was I talking about Lulu? I haven't locked any of my Lulu in yet. Anyway, I'm having some. I talk too fast sometimes. Yeah, never touching Lulu again. Yeah, look at Netflix in the red. Again, I think I mentioned it yesterday. It's like every time they raised prices, people would raise concerns saying, "Oh, this is the straw that broke the camel's back. They're going to lose people. We're going to lose subscribers just on that." It used to be $1 increase in prices, and I mean when it's a $10 subscription, it goes up to $11. That's 10%. I get it, but at some point maybe it does matter. We'll see. And all right, folks, that's it. Let's have a great day. This will be up on the blog in a little bit. Have a great day. Rock and roll.